What's up, everybody? Welcome back to the Crypto Mavericks podcast. And we have a great guest here for you today. It's the co founder, Matthew Nieberg, and he is the co founder of Aleph Zero. It is a layer one blockchain that makes transactions quick, secure, and there obviously we're going to talk a lot about privacy. Matthew, really appreciate you jumping on the podcast today.
Yeah, hey, thanks for having me, Brian and Joe. Yeah, pleasure to be here.
Yeah, we were having some fun there, kind of chopping it up before the show. I always enjoy that. You're a very enjoyable person, and I kind of looking at your credentials, you are very, very well credentialed for the space in Web3. But I would love to know a little bit about just your background. How'd you get into the crazy world of Web3 and then roll into your company?
Yeah, no, it's I mean, it's a crazy story. I mean, and I've told it before, but that's fine. So when I was starting to do some postdocs after I finished up my PhD work, I was one of my postdocs was going to be in Beijing in China. And so I'm
Nice.
sitting there thinking that, oh, well, how do I pay for my apartment ahead of time? And how do I do this, that, and the other? And I'm like, well, I can't just go ahead and order Chinese renminbi, from the bank and have it delivered at the Wells Fargo, right? Like, oh yeah, I remember Bitcoin. Like maybe I could just find somebody who's local and send them like, to do a remittance service. Because this was like the big story at the time is Bitcoin's for global remittance. You could use it to pay somebody to do currency exchange, et cetera, et cetera. So I'm thinking, oh well, maybe I could find somebody. So I contacted a bunch of these the Chinese cryptocurrency exchange like OK China, Bitcoin China, and several others. I don't even know if some of them are even exist anymore. This was back in 2014 even. And so I did get some customer support to get back to me on a few of them. They ran my request up the flagpole, and then, it took about a month to come back and say, yeah, we really just don't offer that service. And I'm like, oh, well, okay. That's, like now I'm thinking, well, what do I do next? Like, how do I pay for this? Because I'm sitting there thinking, oh man, they're communists over there in China. Like maybe they just won't let me, have my apartment whenever I get there. That's kind of my mindset. Obviously, that's really not the case. They're wonderful people. Um, and so it didn't really turn out to be a problem. But this was sort of why I got into Bitcoin because I started buying on Bitstamp and bought some Bitcoin sort of on the premise that maybe I would find somebody to go ahead and do this type of remittance for me. And it turned out that nobody really offered those services. So I think what you saw was that even back then, there's just this disconnect between what the broader enterprises and businesses were offering as solutions to the market versus what the community was saying are solutions for the market. So I think that is probably the biggest takeaway that I had back at that point in time. Um, is just, well, hey, we can sit here and talk about, oh yeah, we can use blockchain for transparency, and we're going to go ahead and timestamp everything and record everything, and like this is just not the reality of the situation. Sure, the technology is, capable of doing that, but from a business and enterprise perspective, people weren't adopting it, or people hadn't built up services surrounding these types of opportunities. And and I think that that's still even the case to today. Like I mean, obviously it's gotten better over, like over the last 11 years since I've been in the space. But I think that that's like the main thing to sort of see from that, at least from that story. Now, how I got into Aleph Zero is I guess just another question, and that happened because I was doing all the stuff back in 2016 and 2017 trading and the ICO era, and so on. And there was just some things that just really seemed off-putting whenever it came to the promises and the hype with the technology stack that people were talking about. What could they do? What they were, what how this was going to be unique, what was going to be really better about it. Sort of the speed claims, the claims regarding security on consensus, and how these were like new projects or new products. And in a lot of sense, there wasn't really a lot of innovation. There was, oh yes, there was some innovation, but a lot of times it was just taking something that had already been done and used in industry or in the academy for like whatever 10, 15 years, then oh yeah, let's throw PBFT and use this as a consensus protocol on top of something. So this is practical Byzantine fault tolerance. And I'm not saying that this is not an improvement over what we had, but there wasn't really like a lot of, substance behind some of these, some of the things that were coming out. And that, to me, this just was a an overall problem. So I came across some of the other co-founders, and we got together. We were describing just the broader consensus problem, and from there, Adam and Mihal were able to actually come up with a better consensus solution. That was from a mathematical perspective and a theoretical framework perspective was optimal. And not only that, they brought on another researcher, Damien, who's phenomenal. He's just a rock star, and is still with us, even today, and does all this stuff with the ZK proofs and things along these lines. And these guys are solid, academic researchers, and they were able to come up with something that was actually innovative. Like this is something new in the distributed system space within just the academy in and of itself. So a lot of that was just going ahead and how do we take some of these theoretical frameworks and this theoretical innovations that we're able to put together and then develop this and bring it to market. And that's sort of like the journey of Aleph Zero, and at least as a starting point, and kind of where we're positioning ourselves today is not just in the consensus and distributed systems world, but whenever it comes to cryptography and zero knowledge proofs, multi-party computation, what are different aspects that we really can identify from a way of how to improve these processes, and then go ahead and push these as new products to market, either as more general like SDK type style products where other people can use some of the groundwork, that framework, and build out their own DApps, their own solutions, while we're also building out our own applications using that same framework. So that's kind of the general picture of what we did to begin with and how we're continuing to approach the project. But yeah, like I mean, it's been what I think we started in 2018, and it's tough, right? Like you're talking about building things out in a way that is using more standard software development principles. It's still build fast and break things, but doing things in a way that is a little bit more on the classic software development side, right? So it's not just a team of hackers that are just pushing out stuff and then, pushing it out to production and then hoping and praying that this is not going to have any issues. That this is not going to endear a lot of confidence whenever you're going out to enterprises, right? Like you try to go out and go to the banks and you go to these other corporations. If that's the mindset in which you're doing development, they're just going to run away screaming. And I mean, that's I think in a lot of sense exactly what we saw in the space back in 2018 and 2019. Just this, there's just this at least some interest in private blockchains or enterprises doing things, but we're just a bunch of hackers. Like I mean, the entire community is just putting things together and hacking stuff together, and then it's kind of built together with bubble gum and popsicle sticks, right? Like, and this is, and not to say that other technology stacks aren't built in the same way. Like, I mean, this happens even in Web 2, but it's really concerning if you're talking about pivoting and moving the entire financial system, your entire enterprise resource planning, everything that is at least it's working and you know how it works and it's like it's safe and secure from that perspective. But to go ahead and take that leap of faith into this new technology stack that hasn't been vetted, that hasn't had any like proper security audits or is built in a way that is just sort of piecemeal together, that's a little scary for these corporates.
Yeah, you mentioned a few very interesting things. I actually wrote something down, and it's, you build fast and break things. Not saying like your company in particular, but that's how a lot of things in Web3 are made. People are building fast, trying to solve problems. Why is this not working? What don't we like about it? And you fix it and you revamp and you keep going. And you've obviously, you said you've been out since 2018 and are absolutely crushing it. whenever you meet like with these companies or these enterprises, and maybe they're not super crypto savvy, they've heard about Bitcoin, they know about Ethereum, they understand blockchain. Kind of what's the pitch overall there? And I know something I was just kind of going through and reading more about. I know privacy is a really big thing when we talk about Aleph Zero. I would love for you to just kind of touch on the privacy part of it, and then also just like the macro view of like what's the difference between Aleph Zero and just all these other blockchains out there?
So you have, I think that the major pitch to the corporates is really privacy and security. And once you
Yeah.
sort of tackle those two things and you sort of assuage and sort of like qualm their fears, then it becomes a much easier conversation. Obviously, there's still the long sales cycle with this. It's still education. You're dealing with maybe not a technical team, you're dealing with a BD team. They've got to convert it into a language to, that they understand. So you're not necessarily talking directly tech to tech, and dealing with like very low level nuanced details. But I mean, that's sort of your primary barrier is I would say that's the primary barrier in all these conversations. And then as far as like what's unique about Aleph Zero, from a consensus perspective, what we have is we have the capability of being fully asynchronous, and also having a constant time for what you call your commitment. So there's two primary metrics that you want to think about. One is whenever you're sending messages across the network, right? You are trying to go ahead and do so in a way that has a constant number. Well, you want to constant is sort of the gold standard is for one thing. So you have communication complexity. How many messages are you sending out across the network? We were able to achieve that to be constant, as well as able to obtain a bound on how quickly somebody can confirm whether or not a message is valid or not valid. So how quickly can you commit a message to the blockchain and say that this is canonical and that this is true? So both of these we're able to do in a using within a constant, or at least for the first one with communication complexity, it's constant, and then with the commitment, because of the way these protocols work, it's average. It's an average number of rounds is constant because you have to use some randomness, and the randomness creates some discrepancies in the algorithm. So you're not guaranteed that it happens within a particular bound, but you can say, all right, on average, because of how the randomness operates, if things are generally good whenever you're just picking out random numbers, then you can say that this is going to happen within 7 rounds, right? Where rounds is something kind of arbitrary and very technical in the protocol. Um, as far as other things that we're doing that's unique, we're able to do a lot of things that, in a lot of sense, it's really a general purpose framework and tech stack, just like all Ethereum is, just like Aptos and Sui are. It just ends up becoming what are you focusing on? And if you're focusing on a particular application or a particular business use case, then that's different than saying, are you capable of doing gaming? Are you capable of doing privacy? Well, everybody's capable of doing the same thing, right? That's
Mhm.
fundamentally the case, especially whenever you think about the smart contract language. These are general purpose virtual machines. They're general purpose compute languages. And what that actually means is that the there's equivalencies, right? So if I'm developing something in Rust or in EVM and that's going to be on the EVM in Solidity or Joule or whatever, I can achieve the exact same, DApp, right? I can, there's some computer science stuff that says there exists some type of equivalency between two different computing languages, and it just depends on the implementation, right? Like there's nothing else that you can say. So it ends up becoming more of a question of what are you focusing on? So our focus then tends to be more on the privacy side, and what we've been able to achieve on this front is we do client side zero knowledge proofs for verification, so and as well as for the generation of the proof. And we were able to do this in such a way that is it's using a standard zero knowledge circuit, which is this classic. I believe we're using Groth 16, which is a particular circuit that was published back in 2016 by one of the authors was, the last name of Groth. That's why it's called Groth 16. Go figure, right? Like not, these mathematicians and computer scientists aren't very creative with their naming of these cryptographic schemes. So but this is essentially the same scheme that almost everybody uses. It's sort of like a general purpose, a zero knowledge circuit. And there's some things that you can do with it. Really, we're focusing this on the privacy payment side of things. And what ends up happening is that there's tricks that you can do with like basically compilers and such where you're doing pre-compilations for certain operations. And then if you pre-compile this and then add it to your binary into your circuit, then you can just speed things up. So think of it from a perspective of I have a computer code, and what I've done is I have a highly optimized library that does cryptographic operations super fast. And this allows me to go ahead and optimize on this architecture. And if I add that as my base level operations for these zero knowledge proofs, then we're able to get sub-second generation and sub-second proof generation for these zero knowledge proofs. And that's actually pretty phenomenal. Like most of these other solutions out there take like anywhere from 20 to 30 seconds just to generate a proof. And then obviously verification is a much quicker calculation. But if you can do this on say your smartphone or on your in your web browser and you can get it within a second, well, what's that do from a user experience perspective? It just makes it like it just feels as if there's no real time that's been, elapsed, right? And that's sort of the key feature that we have on this front.
That's amazing. You brought back a little bit of a fear from my past. I worked in the domain name industry for 11 years, work with enterprises, talking about DNS. And like you said, this responsibility gets kicked into all different departments, whether it be legal, IT, marketing, when you really need them to work cohesively together to implement this. Has that changed with this new administration, right? Things are getting easier. Enterprises are looking, more at this technology versus just, a test versus past in the past. We've seen you work with T-Mobile and Deloitte, tell us about that.
Yeah, I think that I mean, first of all, we tend to be in conversations with more global organizations. So whether or not this administration has eased things up is I mean, I haven't seen anything directly related to what we're doing. I mean, what you've been able to see is that there's more of a willingness and a signal stateside from businesses saying, "Hey, we're now open for business with blockchain." There's a little bit more clarity. There's less there's more of an understanding as to what we can and can't do. I mean, you look at what happened with Operation Choke Point 2.0 and the FDIC just
Hmm.
essentially lied and like they lied to us. Like they said we're not debanking anybody. Like and you're like, are you sure? Like and you look at this and you look at people like Caitlin Long and her fight with Custodia Bank and just trying to just get the regulators to admit that they're playing by one set of rules for one group of people and another set of rules by another and not giving us the real story. So, I mean, from an enterprise perspective, I don't think that there's been a huge, at least we haven't seen that kind of windfall yet. I think that's still coming down the road. I think you're going to see more interest on the tokenization of assets, tokenized stocks. You have Coinbase now. They're talking about tokenizing their
Cool.
coin, their actual token, and then or their actual stock, and then putting it on base, right? Like this is pretty phenomenal. But even beyond that, you have Wyoming is pretty clear whenever it comes to tokenizing, like say like a private equity instrument. So I think there's going to be a lot more happening on that front with private equity firms tokenizing just their deal flow, right? And making that more available, pushing that to alternative trading systems. automating that process, plugging into the traditional system that way, but now doing it so that there's now you're opening up these capital markets on chain because there's previously there wasn't this type of liquidity available. And so now you can have, mineral rights be traded. You could have oil or more on the real estate investment trust. You could have REITs on chain. You could have just private equity deals and investments into a company on chain. So like normally if you're doing private equity and you're investing in a new company, you don't really have that access to liquidity, right? You're investing in a safe. You have a simple agreement for future equity. On the next round, that gets converted into a preferred shares, right? I mean, this is the normal process. But at this point, you don't have any way of exiting. What if you wanted to sell to somebody else? Well, you really don't have that opportunity. But if instead you say, you know what, I'm going to go ahead and create some type of syndication, and I'll set this up where I'm the fund manager, and then I have I basically can put in anything into the I can have other limited partners, and now I can tokenize the shares of that LLC, that limited partnership, and so it indirectly tokenizes whatever you've invested in as a syndication. Now you've opened up that ability to either exit or to have tradability of this asset on these alternative trading systems. So I think that this is a lot of where BlackRock is looking, and other companies like this. And this is a huge market. I mean, the private equity market is way bigger than the public market. And so then you have things like corporate bonds that can be done. You have other opportunities on this front, and I think there's a lot to be said that this is where at least where the a portion of the market is moving. Um, but I think there's also some hesitation as well. So you have in TradFi, especially whenever it comes to public securities, you have these large institutions, these the hedge funds, the endowment funds, they're trading in these dark pools, right? So they're trading large swaths of securities over the counter in a way that's not done on the traditional markets. They're not selling them on the Nasdaq or the New York Stock Exchange. There's some dark pool that exists, which is hiding their trades. And this is something that needs to be addressed if they want to come on board and trade these types of assets in on the blockchain. If they don't have that kind of privacy, they're not going to be deploying that level of capital. And
Yeah.
these are the types of solutions that we've been developing as well, with the zero knowledge proofs to allow for these types of this type of ability where you can have at least the near equivalent of dark pool functionality. And so that actually requires a combination of both zero knowledge proofs and multi-party computation, which is actually one of the things that we pushed out, I think a couple years ago with the common DEX solution that we published.
You make some really interesting
What?
points about the privacy sector. Go ahead, Joe.
Yeah, no, sorry. I was just going to ask if, cybersecurity is such a huge issue. I'm not sure if this falls specifically within there. And just curious about that, right? Because privacy, like you mentioned, helps, well, in one way to support parties that want to hide the transactions, but also in other cases could enable fraud, right?
Yeah.
So a few questions there is just, what's the concern if there's a security risk about any of those integrations?
So from a fraud perspective, I think the most of these answers are mitigated if you have an understanding of how zero knowledge proofs work when you can go ahead and do some type of reveal. So there's this notion of a
Mm.
cryptographic reveal. You can, especially if I'm going ahead and I deposit into a privacy pool and then I withdraw it into a new address and then I mean, now at this point, we actually have clarity that, banks can custody crypto. So say I did this with with Ethereum, right? So like this is one of the probably the second largest uh, coin that's not a stable coin by market cap, unless the flippening with XRP happens with Ethereum. That might happen fairly soon. I don't know. But for let's use Ethereum as the example, right? So I go ahead and I put my Ethereum into a privacy pool. I withdraw it out into a new address, and I want to go to a bank to go ahead and custody this, right? Well, if they have an understanding of how zero knowledge proofs work, I can do a cryptographic reveal that says, hey, this is where the origin of my deposit came from. I can have a full history on the proof of the provenance of funds, and there's no AML risk associated to these assets that I'm trying to bank. Now,
Hmm.
that's a conversation and it requires education with the banks, but it's doable, right? The biggest issue then becomes more on, well, what happens if you have a nation state, a rogue actor? So you have the Lazarus group. So they come in and they deposit into a privacy pool and then they withdraw to a new address. And then they deposit into a privacy pool again and then withdraw to another new address. So even if you have a mechanism that can block a particular address from being from being used or being deposited into say an exchange or a bank or whatever, if you broke up that initial chain of custody whenever it came to the tracing of funds. Now, you could do a couple of things. One is anonymity revoking, but the anonymity revoking does only gets you so far, and it only is useful within a short time period. But there is the ability of doing something called like these proofs of innocence. But the proofs of innocence you need to be able to do in a chained fashion. So if I deposit funds into, well, not I, but say, Lazarus Group deposits funds into a privacy pool, withdraws, deposits funds again into a privacy pool, withdraws again. Now you have this sort of two-step process where they've broken the provenance of funds. And instead, what they need to do, or what you could have the banks do, or the exchanges do, is it's not just enough to have a one single proof of innocence that says that this address, to say address two, so I have address one, I have address two, and address three. So address three is the final address that I've withdrawn to. And if I deposit that into an exchange and then I just have a proof that says, hey, I was able to get these funds from a privacy pool, and the privacy pool, the origin of funds prior to them entering the pool was address two. Address two is not on this blacklist. I'm good to go, right? Like everything's all fine and dandy. But that's obviously not ideal, right? Like this is a way of cracking that kind of system. So what you can say instead is you can say, well, there's an additional hop that you did. You actually took this out from the privacy pool again in address two. What I need is a chained proof of innocence. I need two proofs that says that the address from address two, where that came from prior to depositing into the privacy pool, that needs to be clean. That needs to have no association to the blacklist. And you can always generate these types of chained proofs of innocence in any fashion. It could be three, it could be 10, it could be any number of times that you have some addresses interact with these privacy pools. So there's a way of actually being able to do this, but it requires one, the building this out and kind of looking at, well, what's the heuristic? Do I have at what point can I say that I need a proof of innocence or a chain proof of innocence whenever I sell to a third party, if I sell on an exchange, right? If I do this on a DEX, at what point does the exchange say, you know what, we only need to look back at the last five transactions to be able to say that this is a valid deposit that doesn't have like a tainted history. And these are not necessarily technical questions. I mean, there's some aspects that are technical. How do you make sure that the search path of the previous history, you have the entirety of that included in your chain proof of innocence? That can be a problem. It's not a particularly difficult problem in my opinion, but still requires development and thought to make sure that you've captured everything. But it's more about the problem with the banks and the exchanges whenever you're trying to bank those assets, right? What are their internal policies to say, we need either the entire history to prove that this is like there's no taint of funds, or we need a high probability that in the last 10 transactions that there's been no interactions with blacklisted addresses or what have you. And that's a question of what the banks need versus what a question of what we're able to do from a technology side.
Yeah, ma makes a lot of sense there. And again, the privacy factor seems so key to me for anybody in the enterprise world or looking to go down this path. We were talking a little bit about this before the show, and we talked about just a little bit about the current market, the current admin, kind of where are we going? Where's crypto going right now? We've seen some dips here over the past couple of weeks, but we've probably got some of the most bullish news as well in the headlines. It kind of break that down for me in the audience.
I mean, I think if we got a president that's launching a meme coin, the sky's the limit.
He really wrecked it with that Melania's meme coin. He should have just left it with
I
his.
mean, like if you want to just get down to the real breakdown, I mean, I don't think we're going to see hardly any, type of enforcement actions, at least stateside in this industry for the next 4 years. And if we have a continuation with, say, Vance as the next president, possibly for 12 years. So, I mean, in that regard, I think from a in a lot of sense we're really good. Obviously there's issues with saying that, oh, meme coins are toxic, and they can sort of there's a lot of these rug pulls, and there's no real utility. So it's not like we want to be pushing our intellectual capital, and even venture capital or retail capital into those types of projects. But that is, I mean, in a sense, the reason that there's a bunch of the meme coin craze is precisely because of the policies of the SEC not providing clarity, not providing rules of the road. So if they're coming out and saying that, you know what, meme coins aren't securities, well, where are people going to go? They're going to go into these speculative assets, and they're just going to play in the casino, right? So I think that initially what we're going to see is maybe a flurry of activity more on the meme coin side. But once we get a little bit more clarity with respect to any potential, say, safe harbor or a sandbox whenever it comes to securities, and just clarification on what is a security as a token versus what's not, right? So if you think about it from the, say, the Ripple case, it's pretty clear, at least to me, that if you're doing a pre-sale of tokens to accredited investors, that there is a securities transaction that occurs, right? It's the sale. It's not necessarily the sale of the token. It's not necessarily the tokens itself. It's the investment contract for the delivery of the tokens, and that itself is a security, right? So it's no different than, say, a like a forward contract in oil delivery for in the future. And that these are securities. Like, this is very clear. This is very well established. Um, but now the commodity is no longer oil. It's now a token, and that's fine. Like, I don't think this is going to be a problem. I think you'll have people will be fine registering those types of accredited sales, or those types of sales for accredited investors, but it still locks out retail, right? Like, that still locks out retail investors from participating in Cosmos, right? Like back in
Yeah.
2016, right? You're like, everybody who was retail, who was in the space, had the opportunity to participate in Ethereum. They had the opportunity to participate in all of these other coins. And I think that there will either be a bit of a bit more of an understanding of a safe harbor whenever it comes to, well, if you're just selling tokens for a decentralized network, how far along is this decentralized network? Is it more or less ready to launch? Is there still development that needs to be done? Could you launch the tokens today, for instance, but you still need to do development on new features or on innovations? And I think that's sort of where we need to have the clarity, not necessarily on, oh yeah, I'm going to go ahead and create this utility token, and I have most of the smart contracts, sort of figured out, and it's all ready to go. And now I just need to sell prepaid access to like a AI agent for the API, right? Like, if I,
Mm.
like, this is fine. Like, I mean, if I just want to go ahead and have an AI agent, and this AI agent, if I hold the token, that gives me free access to the API of this AI agent and lets me interact with it, and it does some things for me. Cool, like that should be fine. Like, there shouldn't be a problem with something like this. Maybe I can lease out this AI agent token to somebody else, so I can get some revenue for my holdings, right? Like, maybe somebody else doesn't actually want to buy it, but they're willing to pay a fixed cost. They don't want to have that variable, the volatility of the market, and just directly buy the coin. So maybe they're more willing just to do micropayments on something like this. So I think that there's a lot of opportunity to just get clarity in that direction. But what we've seen is primarily positive news from the institutional side, right? It's
Yeah.
all about banking of crypto assets. It's the in-kind redemptions for BTC for the ETFs. It's staking for the ETFs on ETH. It's uh any number of things that are generally positive from an institutional perspective, but not necessarily as positive on the retail side of things. So we don't have we don't, the news that we've seen hasn't really created the influx of new users, the influx of retail capital to come in. And what I think would be what's missing to get that level of adoption is just better user experience, right? So it's just going to be a better user experience. I have a easier on-ramp, off-ramp type solutions, whether or not it's like in a wallet, like a mobile app wallet, right? This is some of the things that we're building. So like I'm not saying that these are the things that we're building, but these are some of the things that we're building from a user experience perspective. So, you have like a mobile wallet, you have your on ramp and your off ramp, you have like a access to a dedicated IBAN account if you're in Europe. You have you can have like say private payments. You can do this all, very easily, right? Where there's no real risk from a that somebody's going to know exactly that you went down to the local coffee shop and the barista is going to know your net worth, right? Like these are
Yeah.
there's plenty of security risk from the average person just to be able to have some of their transactions to be online. It's not like we're wanting people to hide from the government. We don't care about hiding from the government. We want to hide from the crazies on the internet, right? Like that's really what it comes down to. You look at all these stories of you got people who there's this family that got kidnapped in Chicago that I read recently, right?
Yeah.
And they it was like what they took a hostage the family. They moved them from place to place like 3 or 4 different times. And then after they got them to transfer the funds, like the 4 or 5 perpetrators, they already had their plane tickets all ready to go, and they all fled the country. And the only
Yeah.
reason they caught even one of them was the guy came back in the U.S.
Yeah. It, it's
Like, I mean,
it's a it's a legit
it,
concern.
it's it's a huge concern. Like we were talking earlier. Like you have kids, I have kids, we have families. Like this is yeah, it's a it's a big deal. I mean, like I don't know why people don't think about this more from a security perspective, and especially if we're talking about self-custody of assets, right? If we're talking about be your own bank and controlling your own destiny and not using some custodial service to deposit your coins. Well, like, what are you left with? Well, that means you have to have really good operational security. You need to have other tools in the toolbox
Hmm.
to basically obfuscate how much you have, where it's located at, and have good solutions surrounding this. So, in some sense, it's fly under the radar as much as possible too, just from that perspective.
Yeah, I think about that a lot, especially with like the self-custody thing and definitely taking the appropriate steps to protect myself, my family, everything along those lines. And I've personally done a great job at that, but I think that's another reason why the ETFs are very interesting as well to onboard more retail people because people that have way more money than I could even dream, we're talking millions and millions, billions of dollars. I don't know if they really want to, load their Bitcoin onto a ledger or a Trezor, or if they even really want to go through Coinbase, but they want to do what they've been doing since they started probably building their net worth is calling up a broker and be like, give me exposure to this thing called Bitcoin. And from a security standpoint, that's obviously something they're very comfortable with. And that's why I was extremely bullish for ETFs, and I still am because I do believe that that will be more recognized and more utilized just from like a really high net worth or company or country individual. Like you can get exposure through the ETF world. Matthew, it's been absolutely wonderful talking to you. I could go on forever to be completely honest with you about like everything that you're building and just the overall market. You mentioned meme coins, and I can't get enough of laughing at that JD Vance meme coin called Please right now. It's like all over my Twitter feed
I
with
mean,
his
all the JD Vance memes are hilarious. I
dude.
can't believe, and it seems like it's unending. It's like is this going to stop? I honestly, I don't think so. And he's even leaning into it. He's leaning
He
into it
should.
so much, and he should. It's great. It's actually really, it's really cool to see, to be honest. I mean, in my opinion. But yeah, like I mean, as far as like all this stuff with these like you say high net worth individuals. I mean, just even think about it from the perspective of if you're a millionaire and you want one Bitcoin, there's not enough Bitcoins to go around. Like that's just
I
right
love
there,
that. I
enough,
love that line
done.
too.
And even like you have the Vanguards or Fidelities, they're calling for like 5% of your net worth in crypto, right? Like I mean
A
that's
lot.
nothing. Yeah,
Well,
I
yeah,
mean that's I mean it's a lot, but I mean it's a lot for
it's
this industry, but
it's a lot for the industry,
it's
nothing to the individual.
correct.
And then
So
and then
yeah,
when you're
no,
talking cities and states and countries and government, I
yeah,
mean the
this
list
Bitcoin strategic reserve, they want to, you know, like what is it? Senator Loomis has this proposal to do the buying of like what 1 million Bitcoin over the course of
5
5 years,
yeah,
two
5
hundred
years.
thousand, you know, 200,000, and then have a hodl period of 20 years, right, minimum. And then there is some other stuff where they want to do the redenomination of the gold, you know, that we have in Fort Knox supposedly. No,
Yeah.
I haven't seen the results of that audit yet. But they want to
I,
redenominate the value of that gold, and then they say, oh well, whatever that value is, the difference between the last audit, let's just buy Bitcoin. And you're just like, these are very bullish things, not just for Bitcoin, but for the industry as a whole. And it's exciting to see.
I talk about it all the time because I've onboarded some people in previous cycles. We've been into crypto about like the same time from the timelines you've been talking, but probably this cycle is one where I was getting actually quite a bit of attention from people asking me to get in. And I was like, yeah, like you should get some exposure to this in one way or another. And some of them have bought, and I have too. I've bought Bitcoin at over 100 grand. I've bought Bitcoin as of just the other day when we were 77. Like I've bought the lows, I've bought the highs. Like I don't even really think about it. But I had a buddy of mine text me like, "Is Bitcoin dead?" Because he bought like around 100 grand, and we were at like 77. I wrote something back to him like, "Shut up, dude! Like don't even get me started because I'll just start
It's
chirping you."
yeah, here's the 20th obituary of Bitcoin, you know?
I was like, you should probably get not financial advice because that's not what I do, but you asked my personal opinion, and I've basically been like, yeah, I buy on major red days because I don't see a path for failure right now. And in my own personal opinion, I don't think this is the cycle top by any means. I think this is just kind of the ebbs and flows in the cycle.
Yeah, it's what's different about this cycle, and I it is sort of to go back to our conversation before we started, is that this cycle is different, right? You have the ETFs, you have more institutional interest, and so then you know the previous cycles you had all of this, you had everybody there was some type of narrative, right? There was some narrative in crypto that onboarded all the retail users. And now that narrative hasn't stuck, I don't think. I mean, meme coins was the narrative in the last cycle in DeFi summer, right? Like it's not like it's new. So to me, it seems like this, even if it were to be similar to the previous cycles, this is like that mid-cycle pullback. This
Yeah.
is that 35% pullback, and then, you know, we'll see what happens from there. But it's unclear. I mean, obviously, like you say, none of this is like financial advice. It's different every time. There's a lot of other things happening from an institutional side that make it really different. So, but yeah, I think overall, I don't necessarily think this is like definitely not the end of Bitcoin, not the end of crypto. Like this is like yeah, we're just getting started.
Yeah, I mean, you've been in it a long time. You definitely get it. I would love for you to give an opportunity for people to find you if you want to be found, even or specifically really define the company and how they can get more involved.
Yeah, so you can check us out at Aleph underscore zero on X, and then my X account is also Matthew Niemerg. And then you can check out our website at alephzero.org. We have links to all of our socials, Telegram, X is also there, Discord, And then, well, we're gearing up for this new privacy pools solution, right? Where we're actually doing these types of, where you can actually go ahead and deposit your stables into a privacy pool, and then, well, they're idle. Well, what are you going to do with them? We'll put them into our yield protocol or yield aggregator that we're gearing up to have as well. And, in the end, what does this really give you the opportunity to do? It allows you to hide your wealth from, potentially nefarious individuals. You're not really trying to hide from the government,
Yeah.
and, it just makes you safer and more secure. And that's like, you can sleep at night. If you have a family and you have a lot of crypto, then this is one way of getting that kind of security and that peace of mind.
Yeah, it's a great pitch. It really is. It's something that I'm sure Joe and I both will investigate, and I urge anybody in our audience to take a look at it. We'll get post those links down below the video. Matthew, we appreciate you jumping on.
Yeah, thanks for having me, Brian. Thanks, Joe.